Welcome to our today's lesson. I'm so happy to have you back again in this lesson. Wish you success and profit in your trading. After watching this lesson, professionally you will be able to calculate your position sizes, volume or lot sizes for each trade you are going to place. It means how much money you should use for each trade, and also you will learn how to determine your risk and reward ratio to achieve a profitable trade with a minimum risk. In this lesson, you will see how I specify and calculate my position size, risk and reward in a live market. Today, in my live trading, I will place two orders. In the first order, I will long or buy the USD CHF, and in the next trade, I will short or sell the AUD CAD. Also, you will learn how I analyze my trade, and in this lesson, you will see my today's trade result as well. So you will learn practically how I place my order and what I do to make profitable trade, and also you will learn the same. If you watch this lesson until the end, you also learn how to trade successfully. Please stay with me until the end of this lesson. So let's start our today lesson. But don't forget, at the end, we are applying all this lesson in a live market. Let's go. In this chapter, we already have taught 3 parts, and our today lesson is in part 3. So if you have not watched our previous lessons from part 1 to part 2, I already have mentioned their related links in the description below. So in the part 3, we already have taught 2 lessons. Lesson 9, the basic concept of Forex. Lesson 10, how to trade professionally. So if you have not watched this lesson yet, please, I do recommend you to watch these lessons. And I have mentioned this link in the description below as well. Our today lesson is lesson 11, how to determine the lot sizes and risk amount in a trade. So it's very important lesson. If you think that this is not important lesson, let me ask you a question. How you determine your lot amount? How you trade 1 lot or 0.5 lot or 0.2 lot or 0.3 lot? How you specify this volume for your trade? 90% of the traders, they do not consider this important parts in their trading. And I'm sure 100% of those traders that they are losing money in this market, they never calculate their volume sizes in a trade, and they never calculate their risk amount. So the volume amount always will be calculated according to your risk. So this is very important. Let's start our today lesson. Chapter 2, lesson 11, content. So today I will teach you the following. 1. How to determine the lot size or trade volume. 2. How to determine the risk amount in a trade. 3. What is stop loss and take profit. 4. What is the risk and reward. 5th, applying this lesson in a live market. So please stay with me until the end of this lesson, and also at the end you can watch my live trade that I'm applying this content. So prior we jump to the next part, please don't forget subscribe to our channel now, hit the bell, and also don't forget the like if you want to watch our next courses for free. How to specify your trading volume or amount in a trade. As a successful and disciplined trader, you have to know how to specify your trade volume amount. Here is the 4 steps roadmap for determining your volume size and risk amount for each trade. 1. Specify your sell stop, take profit level and risk amount. 2. Calculate your risk and reward ratio. 3. Specify or calculate your risk per your total capital. 4. Calculate volume size as per the risk per total capital. So for calculating the volume size, you have to apply all these above 3 steps. So if you didn't know about these 3 steps, you cannot calculate your trade volume sizes. Quote of the day. We want to perceive ourselves as winners, but successful traders are always focusing on their losses. So from this lesson, I decided that in my annual lesson, I bring one good quotes from successful traders, that it will motivate you and also it will help you to learn from them. They are sharing you their decades of experience in this market. 1. How to determine the lot size or trade volume. Understanding the lot or volume size is the most important factor for controlling the risk and proper risk management before applying for any order. So for calculating the proper volume or contract size, we will use the following formulas. Loss amount equal to allowed risk divided by SL or stop loss in pips times CR or current exchange rate times 0.1, which is from formula. So SL means stop loss in pip, CR means current exchange rate. So now in this formula, the only thing that we don't know it is allowed risk. Let me teach you what is allowed risk. Second, how to determine the risk amount in a trade. or how to determine the allowed risk in a trade. Risk per trade should always be a small percentage of your total capital. A good starting percentage could be lower than 1.5% of your available trading capital. The recommended risk per capital is not higher than 1% of the total capital. As per my 10-year experience in this market, even 1% is too much risk. Maybe you have heard some here, or maybe you have read somewhere that allowed risk is 2% of your total capital. No, don't try that. Once again, I repeat, don't try that. 2% is too much. Even 1% is too much. So please, in the maximum, don't try to risk more than 1% of your total capital. So allowed risk is equal to 1.5% of your available capital. So this is the formula. So here I have mentioned 1.5 because it's the very maximum. You should always use lower than that, not more than 1%. So let me give you an example here. Example, if your available balance is 11,262 USD, how much you are allowed to risk in a trade? So this example is from my current balance. So here you also see a part of my balance here, 11,262, which is from my actual account here. So answer, I use this formula, allowed risk equal to 1% of my available capital, which is equal 169 US dollars. It means that for this capital or balance that I have, if I place an order, I'm not allowed to risk more than 169 US dollars. So now, if this is my risk, so the question is, how much will be my volume? 1 lot, 0.2 lot, how much? So this question could be answered while that I have know about my risk and reward. So after I understand my risk and reward, then I could answer these questions. And after that, able to determine my loss amount. So what is a stop loss and take profit? 1. A stop loss determined as an order that you send to your broker, instructing them to limit the losses on particular open positions or trade. Here is my current price, and my closest support is exactly lower than the current price, and my resistance is here above the current price. So as you see, this support line previously acted as a resistance. So here you see that it's acted as a support. So I guess the market might go up. So the stop loss will be on the closest support, which is 50 pips lower than the current price, and my take profit will be 180 pips higher than the current price, which is on the closest resistance. If I place order here, so I risk 50 pips. So my risk and reward ratio for this trade is also 1 to 3.6. So this is a fair one, but not the recommended. So anyhow, as an example, I will explain that here. I decided to place a long order, or I will buy this pair. So my order is placed 0.2 lot. So now we have to see what will happen. Ouch. You saw that it hit my stop loss. So it means that I lost 50 pips for this trade. So if I did not place that stop loss, so today I had to pay 176 pips as a loss. So it means that stop loss prevents from more losses. So stop loss is very important because it prevents from more loss. And always respect your stop loss. Even if you are offline, the stop loss will act on behalf of you, and it will save your capital. Remember one thing, it's not only my experience, it is from other successful trader experience, that they have 40-50 years experience in this market. They always indicating that focusing on the loss will make you rich. Limiting the loss can make you a successful trader, not big profit. So always keep that in your mind. Stop loss save your capital, not profit. So if you are beginner trader, so you might become confused at what I'm saying, but it's the truth. Second, a take profit or TP is an order that you send to your broker in the same regard as a stop loss, notifying them to close your positions or trade when a certain price reaches as a specified price level in profit. So now here is the current price, and here is the support 1, and here is the support 2, and here is the resistance 1. So here I assume that the market might act as a support, and here is already acted as a resistance. So in the other hand, the small uptrend also is broke down, and the resistance 1 is broken many times. So in the other hand, technically here the hammer and hanging man candle is formed. When I am applying my trading checklist, so it shows that the market will go down. So if you don't know what's the trading checklist or how to apply the trading checklist, please watch my previous lesson, how to trade professionally, and I have mentioned this link in the description below. That's a very important lesson. Please don't miss that lesson. So as per my technical analysis, the market indicates that it will go downside. So I will short or sell this pair. So regarding my stop loss, so I will place my stop loss level hammer candlestick pattern, which is 52 pips higher than the current price. And I will place my take profit here on the support 2, which is 223 pips lower than the current price. So I will place my sell order and then I will wait for the result. So after some days I will see, wow, that the market hit my take profit. So it means that I could make 223 pips. Take profit is also important as a stop loss, because placing take profit and respecting take profit will prevent from becoming more greedy, and it prevents from more greed in this market. Because most of the times those traders that you are losing money here, the main reason is that they become more greedy and they will not become satisfied with smaller profit. So they think that they can make millions within a night. So even if their trade is in a profit, at the end it changed to a big loss to them, because they do not have take profit and they become more greedy. So when you place your take profit, even if you are offline or even if you trade as a part-time, this take profit will act on behalf of you and guarantee your profit. So always place your take profit and stop loss and respect the both. So now you already understand about the stop loss and take profit. So maybe you guys don't know how to specify the ratio between your risk and your reward, or ratio between your stop loss and take profit. So this is important because you also need to understand that risk and reward ratio. Your trade cannot be successful if you only apply the stop loss and take profit. You have to understand the risk and reward ratio as well. And after that, you can be able to determine your lot size in a trade. So please stay with me. Don't forget to subscribe and like. And also, if you have any question, so please leave a comment, and in the coming lessons I will answer that question. 4. What is risk to reward ratio? The risk to reward ratio is the ratio of number of pips or amount of money that traders will risk in the hopes of reaching the target or profit. So if you guys know about the risk and reward ratio, so it is fine. You can watch the next part of this lesson that I'm applying all this in a live market. But if you don't know that, so please stay with me here and watch this part. Risk to reward ratio of 1:0.5. It means that you are going to risk 10 to make 5. Risk to reward ratio of 1:1. It means that you are going to risk 10 to make 10. So if your risk and reward ratio is smaller than 1:2, so never apply that. For instance, here it's a EURUSD chart, and also here is the current price. So technically the market shows that it might touch this support, and also here is our resistance and this is our support. So the market technically indicate that it might touch this support once again, or maybe it might go lower than this. So we don't know, but at this stage, at least the market technically give us a signal that it might hit this support. But we have to calculate, if I short here, is it worth to make this small profit or not? So here, this is the reward, which is 45 pips. But how much is our risk? Our risk is 241 pips. So it means that if we are risking at least 5 times more than our reward, so this is not a good risk and reward. Even if technically the market gave us a signal to go, but if the risk and reward is not properly, stop, don't trade. Wait for the another opportunity. So here, if I short to make 45 pips, you know what will happen? See. So that's why I'm not trading here, because the reward is very small compared to my risk. Even if the technical analysis or indicators give me a go signal, but I'm not following that because my risk and reward is not proper or not as per recommended. Risk and reward ratio of 1:2. It means that you are going to risk 10 to make 20. This is also not allowed. This is also a bad risk and reward ratio. So till this times you are not allowed to apply these types of risk and reward ratio. Fourth, risk and reward ratio of 1:3. So this is also not recommended, even it's a fair one, but this is also not recommended. So let me give you an example. So here now this is the current price. So technically the market indicates that the price might go up, because here is our support and here is our closest resistance. So if we buy, so from current price our risk will be 96 pips and our reward or take profit also will be 96 pips. It means that we are going to risk 96 pips to make 96 pips. So this is not a proper risk and reward ratio. Even if we fail, we still is a big risk, or if we buy, so the risk is high. So this is 1-to-1 risk and reward ratio. This is not a good one. So if the market cross this resistance, so at that times I might have risk to reward ratio of 1-to-3. That it's fair one, but here is already a resistance, so there is a very small chance that the market could be able to break this resistance, because this resistance seems very strong. Many times the market tried, but it couldn't break this resistance. So this time I assume that the market might not be able to cross this resistance, that I can make 1-to-3 risk and reward ratio. So 1-to-3 risk reward ratio is also not a good one, it's a fair. So now I'm placing a buy order here. See what happened? The market went down. So that's why the 1-to-3 or 1-to-2 risk reward ratio is also not a good one, and also they are not recommended. So what is the recommended one? Risk to reward ratio of 1-to-4. So this is a recommended risk and reward ratio, and it's a good one. So if your risk and reward ratio is 1-to-5 or more than 1-to-4, so they are excellent one. So always try that your risk and reward ratio should not be smaller than 1-to-4. So let me give you an example. So here in the USD CAD chart, this is the current price, and technically the market shows that the price will go up. So here, as per technical analysis, I guess the market will go up. This is the support, and also I will locate my stop loss in this level as well, and here will be my assumed resistance, and I will place my take profit here. So my risk will be 44 pips. So if I buy here and the market do not move as per my desired directions, so my loss will be 44 pips. But if the market goes as per my desired direction, so the reward will be 490 pips. And my risk and reward ratio will be 1-to-11, which is excellent. So now I'm going to place a buy order here. So you see what will happen in the next move. Wow. So the market already reached to my take profit. So always remember this. Do not only rely to the technical analysis. You have to apply all the trading checklist. And risk and reward ratio is also part of the trading checklist that I already explained in the previous lesson how to trade professionally. So already you learned the all 4 steps roadmaps. So now this is the time that we apply all this in the live market. Applying these lessons in the live market. So now we are in the very good part of this lesson that make you able how to apply all this in the live market. So we already explained about these 4 steps. So now we are applying all this in a live market. So now this is the live market. So it's a USD CHF currency pair, and here is the current price, and my stop loss will be right here under the current price, and my take profit will be here above the current price. So it means that in this trade I am going to buy. So my stop loss or risk amount will be 15 pips, and my take profit or reward will be 238 pips. So my risk and reward ratio is almost 1-to-16. So it's a good risk and reward ratio. So now there is a question that why I am going to buy before any technical analysis. So because I already applied all the trading checklist and I technical analysis right here, but briefly I am going to explain that. So I don't want this lesson become too lengthy, because previously I already taught that how to trade professionally. So now let's jump to the monthly chart. So here in the monthly time frame, you see that here this red level acted as a very strong support since 2011. So once the market tried to break this support to downside, it was in 2011. At the second time, it was in the end of 2013, and then it was in January 2021, and now it is in July 2023. So now psychologically this is very strong resistance, and I think that the market will repeat the same scenario like 2011, as here is a monthly candle, so there might be a strong correction, or again this level will act as a support, or the price might bounce back from here and go back to upside. But they are all as assumptions here, but I'm not so sure. But the things that make me sure is that the price will have a good correction here, because we are close about the end of the month. It's around 1 week after the end of this month, and in this month, during this 1 week, or in the coming months, the price will have a correction to the above side. And also, as per my personal technical analysis, that I have developed a strategy that I'm calling that cherry picking. So according to that strategy, it gave me more confidence that the price from here will go up. if it's not turned back to the upside, at least we will have a good correction here to the upside around 300 pips. So no worries, I will teach you all this technical techniques analysis, especially my cherry picking strategy that I told you. It'll work against the trend and along the trend. So it is one of my most profitable strategies. So let's go back to our daily time frame. So here, as per my technical analysis and after applying the trading checklist and my trading plan, I'm going to place my long order. But the main question is, how much should be my volume? 1 lot, 2 lot, 0.5 lot, how much? So here is the main question that should be answered. So lots amount is equal to allowed risk divided by stop loss times current exchange rate times 0.1. So this is the formula that at the beginning of this lesson I mentioned. So now let's calculate my risk amount and trade volume for placing this order. Allowed risk is equal to the 1% of available capital. So you already know about these two formula. I will first determine my allowed risk. So my allowed risk is equal to the 1% of my available capital, which is $11,262. So my allowed risk will be $113. So it means that for this capital, if I risk 1%, I'm only allowed to risk $113. So according to this risk, I will determine my lots amount. So according this allowed risk, I will calculate my lots amount. And my lots amount will be allowed risk, which is $113 divided by stop loss amount in pips. As you see here, it's 15 pips times current exchange rate, which is 0.8581 times 0.1, which is from formula. So my lots amount will be 0.65 lot. It means that if I risk $113 or 15 pips, I'm allowed to trade 0.65 lot. And also remember, if I allocate 0.65 lot for this trade, I will not be allowed to trade any more. So I have to wait until the end of this trade to hit my TP or stop loss. Then I will be allowed to trade. If I trade more volumes or if I involve more amounts from my capital, it means that I'm increasing my allowed risk. Now it's 1%, so it will become 2, 3, 4 or more. So never do that. So what I will do here? So as per my experience, I already learned that I should not put all eggs in one basket. It means I will distribute this 0.65 lot to the smaller lots to can trade many other currency pair. So for this trade, I will use volume of 0.2 lot. So for 0.2 lot USD CHF in 15 pips stop loss, my risk amount will be $35. So if you didn't know how to calculate the pips amount, I have taught that in the previous lesson on the how to calculate the pips value and loss amount. Please watch that lesson. So here I'm not calculating that again because it will take too much time and this lesson become too lengthy. So now I'm going to trade 0.2 lot and my risk for 0.2 lot will be $35 and my maximum allowed risk is $113. So means still I'm able to risk $78. So now here I'm going to place my long order. So already I placed 0.2 lot for this trade. So I already have done with the USD CHF trade. I placed my take profit, placed my order, and also I placed my stop loss here under the current price. As I have mentioned that still I have $78 to risk for another trade, and I did not use all that in one trade or in one currency pair. So the other currency pair that I already done its analysis, it is AUD CAD. So in the AUD CAD chart, this is the current rate, and here I'm going to sell or short this pair. So why? So let me explain you briefly the technical analysis of this trade. And I applied the other part which is in my trading checklist and my trading plan. Here is the 200 SMA or simple moving average. And you can see here the price bounced back down. It means that 200 simple moving average acted as a resistance. And also here this is a Bollinger Band upper side that's also acted as a resistance, and the price bounced down exactly from Bollinger Band's border. And here is the 6-month downtrend resistance that you see the price from this trend also bounced to downside. And the other part is the candlestick pattern which shows hanging man. So here you see that at least 4 indicators indicate that the market will go down. So technically, nicely the market shaped to downside. So what I will do, now I'm going to place my stop loss first. So my stop loss will be exactly here above the hanging man. and my take profit will be here on the weekly support. So my stop loss or risk will be 42 pips from the current price, and my take profit or reward will be 191 pips. So my risk and reward ratio is 1 to 4.5. So it means that it's good, or even more than good. So here is a good opportunity for sell. My risk reward ratio is okay, and my trading plan, trading strategy, and trading checklist, all these allowed me to enter for this trade. So if you don't know about the trading checklist, I already taught that in the previous lessons, and if you don't know about the trading plan and strategies, no worries, in the coming lessons I will teach you those parts as well. So please don't forget subscribe to our channel to not miss those important parts, and also don't forget to watch the previous lesson that how to apply a trading checklist or trade professionally. So now I have to calculate my loss amount, so how much money I am allowed to allocate for this trade. So here the loss amount is equal to allowed risk divided by stop loss in pips times current exchange rate times 0.1. So and also allowed risk that we already have a spare from previous trade, it is 78 US dollar. So the total amount according to my capital was 113 US dollar that we calculated a while ago. But I have used 35 US dollars in the previous trade in USD CHF. So now for this trade I have 78 US dollar to risk. As the AUD is the base currency in AUD CAD, so I will change the 78 US dollars to Australian dollar. If you are new in this lesson and don't know about the base and code currency, no worries, I already have taught that in the previous lesson on what is the currency pair and currency code in Forex. And I've mentioned its link in the description below. AUD USD current rate is 0.6733. So 78 US dollar is equal to 78 US dollar divided by current AUD USD exchange rate, which is equal to 116 Australian dollars. So after I change the US dollar to the base currency, now the loss amount will be 116 AUD, which is the allowed risk, divided by stop loss or risk amount, that which is 42 pips here, times to current exchange rate, which is 0.8995 times 0.1, which is from formula. So finally the loss amount for this trade will be 0.24 lot. But here is one thing that might confuse you. Previously, while we calculated our loss amount in the USD CHF as per total risk amount, it's shown 0.65 lot. But here the total of 0.24 and 0.2 that I already used in the USD CHF trade, it will become 0.44 lot, not 0.65 lot. The reason is that here in the AUD CAD trade, here the risk amount is 42 pips, but in USD CHF the risk amount was 15 pips. So remember this, anytime you are changing your risk and reward ratio, please recalculate, because it directly affect your volume or loss amount. So finally I decide to trade 0.2 lots. Still I want to be conservative, and I will not use even 1% risk. So here I will place 0.2 lots. Stay with me and I'm showing you the result of my both trades. 3 days later. So as I traded all in daily time frame, so I waited for 3 days. So now let's see the result of our trading. As you see here, it is the 4-hour USD chart, and also as you are in the picture, so we have already 2 trades here, means we had 2 open position. One is the AUD CAD that right now 152 US dollars I'm in profit, and another one is USD CHF 176 US dollars I'm in profit, but you see that the profit is keep changing. And also totally I have 317 to 20 US dollars right now I'm in profit. So you see that in very small trades amount, in very small volume, so I'm in a good profit now. And also here you can see my sell stop, which is 35 US dollars, lower than the current price, or 15 pips that already we calculated in our risk and reward while we are placing our order 3 days ago. Here in the other side you can see my take profit, which is 446 US dollars or 196 pips. So if this trade hit my TP, so I can make 446 US dollars in this trade or 196 pips. In my AUD CAD trade as you see here. Also, I'm in a good profit, and you can see here the chart that my stop loss is around 63.74 US dollars or 42 pips, and my take profit is here 290 US dollars or 191 pips. From current price to my take profit in AED CAD trade, I am 86 pips higher. So it means that I need this price go down around 86 pips more. But in coming days, in this week, we have very important events. One is the US interest rate and the Fed conference, and the consecutive day we have the ECB rate decisions and press conference. So these are very important events. I will not let my trades be open until that day. So I will wait. If the price did not hit my take profits before that event, I myself will close that trade. If my take profit hits before that, so it's okay. Otherwise, I will not wait until to that day. One day ahead, I will close all my profits, because during that events in the market will happen a big turbulence. I want to keep myself safe from that coming turbulence. So also you should know that, because in the previous lesson that I taught how to trade professionally, I have mentioned in the trading checklist, you should understand while you are trading or when you have open positions in the market. So always check the economic calendar and economic data release, because they are important. Some of them have very big impact in the market, and it might change all the trend. So prior that day, if you have open positions, close that positions. So these are very important. Thanks for watching this lesson until the end, and also please don't forget to subscribe to our channel, and if you have any question, please leave a comment and I will answer them in the coming lessons.